nice depiction of what the rates are versus the intraday move in half a screen, and that will also come up. But the small cap index too, maybe not as strong as the mid cap index, but has performed well, and which is why I reckon that the market breadth currently would be at the best position of the morning thus far. Look at that. It started off well, then kind of slipped a little bit, and while the advanced decline ratio is still in the favor of the declines, it's much better than how it was for a better part of the trading day today. Bring up the heat map and show you what's happening at the large cap end of the market at least. More red than green, but there are individual stocks which have done very well for themselves. So Britannia, after starting off weak, is up about a couple of percentage points and amongst the top three names. Adani Ports up about a couple of percentage points on the acquisition. Bajaj Finance is the top performer and a far cry from the 6,200, 6,300 levels that it was trading at some time back. There is some traction in PSUs by and large, because you're seeing from a BPCL, NTPC, ONGC, Coal India, that whole clutch of stocks do well. What has not done well? Auto's taking a bit of a backseat after being in the driving seat earlier in the day. There is iShares, which is amongst the top losers. There's Reliance, Infosys, ICICI Bank. So clearly, the heavyweights are down in trade. And just before I hand it over to Samina, if you just look at the contributors list today on the Nifty, the weight contribution of the Nifty on the losing and the gaining side, you will see heavyweights here. Reliance, HDFC, ICICI, Infi. Between them, they haven't corrected too much. But whatever little they have corrected is leading to this pressure, slight pressure that we've had on the index today. But Samina, the broader end of the spectrum, and while the advanced decline may not be depicting that, the indices by themselves have done really well.
Yeah, not too bad. The broader markets are seeing outperformances compared to the benchmark. Remember, this is a trend we've gone back to after many, many weeks. Remember, after that whole blower that happened in terms of broader markets being very expensive, it was the broader markets that was underperforming the benchmark consistently. Today, like we said, is better and different, where the stock-specific trade, smaller sectors are actually picking up trader interest in the session. So, on the face of it, may not look great, but it's actually not a bad construct in terms of today's trade. Couple of counters that are moving the index today and have seen a good go from the get-go in early trade this morning. Uno Minda tops the list on that. Uno Minda has had a pretty good run. They've had a partnership where they've signed up an agreement to manufacture and sell EV battery chargers. They've also gotten upgraded on back of that. So all those factors really helping Uno Minda in trade today. The stock is off the day's high point, but still looking very good in terms of volume play. You've got Avenue Supermart. A bunch of brokerage upgrades have come in with upgrading Avenue Supermart, on back of which the stock sees a 4% up move. Well, Finolex is topping your gains in the list today. There's no apparent reason of why Finolex is doing well, but the stock is up and about. It's up 6% as we see it. Interglobe Aviation, again, brokerage upgrades there, 25% upgrade, 25% upside on Interglobe Aviation from current prices, what UBS believes, on back of which the stock is looking very, very well placed, consistently seeing buying from the get-go. This morning, the stock is up 6%. Private insurance players are having a good day of trade. So you've got Max and HDFC Life both looking pretty good in today's day of trade. Gujarat Pipavav is the other big gainer. And you've got GM and IFL on the sell side in today's trade, on back of expectation or back of a special audit that is expected to be undertaken by the regulator starting 11th April. So those are some of the big movers and shakers. Indus Towers continues to do well. It's a 4% up move as well. After a 9% rally the stock saw last week, continues to see traction in today's day of trade. So Niraj, stock-specific trade, and I think that's what's driving this trade. Lots of opportunity for traders to make money for sure.
Certainly, let's try and enhance those opportunities. Get in Kunal Shah, Senior Technical and Derivative Analyst at LKP Securities, with his thoughts. Kunal, good having you. Thanks for taking the time out. Kunal, this slightly divergent performance within the indices, despite the fact that the overall market breadth isn't positive, but as an index, mid caps and small caps doing well. How do you analyze the trade on the specific indices, Nifty, Bank Nifty, or anything else?
Good afternoon, Niraj. I think this is the truncated week what we have, and because of this truncated week, we will be having moves where the index will be a sideways, but mid cap and small cap will continue to gain some traction. So I think the entire week is going to be like that. I don't expect any big momentum coming in either of the index, that is Nifty and Bank Nifty. My range for Nifty is 21,850 and 22,200 on the upside. So So I expect this range to be maintained. And for Bank Nifty, on the higher end, 47,000 is an immediate resistance. So once that is taken out decisively, then we will see some short covering coming towards 48,000 on the upside. But my sense is even Bank Nifty would be stuck in a broad range with the mid cap and small cap is where we'll be seeing the action for the next couple of days. So I'm bullish on the mid cap and small cap space, but for the headline index, I may see some consolidation move in the coming days.
Kunal, the stock of the afternoon is Indigo. Started the day pretty well, built on to those gains. Fundamentally, of course, there are enough and more news triggers indicating a 25% upside from current level. On the charts, does Indigo look good? Is it still a buy at these levels for trading gains?
Yes, I think definitely. Even at the current levels, the stock looks very attractive. The stock has given a fresh breakout, and it is up by more than 5%. So obviously, those who have already purchased it from the lower levels continue to hold it. For a fresh entry level, if you get any dip, that would be ideal. Since the headline index is a little bit weak, you might get some opportunities on the lower end. 3450, 3460 is an ideal level where probably one can initiate fresh long positions. So 1% downtick move, what you get, that would be an ideal point to enter again. That is the support zone. I expect Indigo to go toward the levels of first is 3650 and second is 3725. So I think a good upside even from the current levels is visible from Indigo.
Right. That's the technical view coming in on Indigo. And like we said, a list of brokerages are gung-ho on Interglobe Aviation. UBS expects a 25% upside from current levels. Mahima is standing by with more on that. Mahima, it looks good. It's looking good, rather, for Interglobe Aviation. At least that's what the brokerages think.
Absolutely, Samina. So a lot of brokerages came in for Indigo today and they've maintained bullish stance. I'll start with Citi. Well, Citi has maintained buy with a target price of 3,700. They've said that the supply growth and the demand acceleration will double the Indian aviation passengers by FY30. The addition of A321 XLRs will expand the serviceable radius and aid further passenger growth. Then there was Morgan Stanley, which is maintained overrate with a target price of 4145. Which is with an upside of 25%. Well, they've said that the company will add one new aircraft every week in 2024 and management aims for a double-digit capacity growth in FY25. There was also an MK note which maintains an ad with a target price of 3,500. They've said that the aircrafts on ground will peak in the next 1 to 1.5 years. And lastly, we also had Motilal Oswal, which believes and maintains neutral or interglobe aviation with a target price of 3,110. They said that the firm is working to increase its international presence by entering into strategic partnerships. And India could become the third largest aviation market by 2035, and this could benefit Indigo overall. So this is the overall view of what the brokerages are making out of Interglobe Aviation.
Well, Mahima, stay on, because I mean this is clearly strong. And you know the beauty about the Indigo move today, it's not that it started off 6% higher. It's had a very nice trending day today. It gave ample opportunity to traders to go in, buy the stock, and now enjoy as it's trending higher and closing in, or seems to be closing in at the high point of the day. You know, the other, and Kunal, of course, gave us his view on Interglobe Aviation. The other one in focus today is Avenue Supermarts, because that also is surging. Pull up the intraday of Avenue Supermarts and you'll see that 4%, maybe not as much as Indigo, but it's surging very, very well. And I'm guessing here too, there is some positive commentary coming in, as well as the fact that the stock has not done anything in the last 2 years, which might be giving a bit of a base effect as well. But Mahima, what are brokerages saying about Avenue Supermarts?
Right, Niraj, so I'll start with what ICICI is saying about Avenue Supermarts, where they've maintained an ad rating with a target price of 4,800, which is a 12% upside from its closing price as of Friday. Well, they say that DMart's revenue performance has been stable at between 18 to 21% of 4-year CAGR, and despite of the lower contribution from their margin accretive segment of April, their margins have remained stable at 5.6% in 9 months FY24. And the performance of Avenue Supermarts is driven by premiumization in non-food segment and improvement in the distribution efficiency. They also said that DMart is turning conservative in terms of offline retail expansion, which will aid growth in the near-term future. There was also a CLSA note which has said that last week it initiated buy with a target price of 5,107. They see that the total addressable market will grow by $2.3 trillion in the next 25 months, and they see that DMart's share in this will rise from 1% at present to 5%. And they've also seen that they're also saying that DMart store will increase 3 times by FY34 from 341 at present, and they see potential over 7,000 DMart stores in the next 25 years. Overall, if we talk about analyst recommendations, well, 12 say buy, 5 say hold, and 9 say sell. So this is the overall brokerage view of Avenue Supermarts.
Right, that's the call coming on Avenue Supermart. It's having quite the field day in today's trade. Kunal, do you track Avenue? It's taken a while to make moves, but today it is turning out to be one of those days when the counter is drawing enough and more attention from traders. At the current price, is there a trading opportunity, or it's a missed one here?
Yeah, I think majority of the moves you can say has been missed here. The upside next resistance on the technical chart for DMart is at 4,600. So 4464 it is currently trading at. So even if you look from the current levels, there's good 150 points upside still there, which is almost equal to 4 to 5% over here. So I think those are already holding it from the lower levels, continue to hold. There's still upside left. For fresh entry, wait for opportunities on dip. Now the support for the stock is at 4400. So if you get the stock in the range of 4420 to 4430, that would make a good risk to reward opportunity for you as well. So accumulate at those points at 4420, 4430 levels. Look for targets of 4600 on the upside.
Okay. And before we hit that break, Kunal, what are the stock recommendations for the afternoon from your end?
See, my stock recommendation first would be Finolex Cables. I think a very beautiful technical setup what we have got here. The stock has given a double bottom breakout on the technical charts with a good rise in volumes as well. We can expect a good up move in the stock in the coming days as well. Finolex Cable currently trading somewhere around 960, 950 zone. So one can buy at the current levels or any dips towards 950. The downside stop loss should be placed at 890. I'm looking for targets of 1100 on the upside. So this will be a bit of positional call, but I think a very good setup on technicals what you have got and a confirmation of a breakout.
Right. Kunal, stay with us. Those are a few of his buy calls, trading opportunities, stocks like Indigo, Avenue, Finolex grabbing quite a bit of attention in trade today. We'll take a quick break. We'll come back. We'll talk more to Kunal and understand better about what is happening in the markets this afternoon as we gear up for the last half an hour of trade.
right, back with India market close right here on NDTV Profit. While we've spoken about a lot of stocks which have gained today, and yes, a lot have gained quite significantly today. A few losers. Hindustan Construction Company, for all the fanfare, is down about 5.5% in trade today. So that's not done all that well. There is weakness in Adani. That's down about 8%. JM Financial and IIFL have looked slightly wobbly in the session today. So both of those have corrected. And real estate, we mentioned at the start of the day as well, some specific stocks. Brigade, for example, is down about 3.5%. But some of the others too. After having a very good run the whole of last week, Brigade, Sobha and some others have pulled back a bit. So before we do that conversation on gas, Kunal, just a quick word on real estate. Very weak performance in the week before last. Last week it bounced back, the index up 5%. Today again a bit soft. How do you trade this?
Yeah, I think there is going to be consolidation in the entire real estate space after the massive outperformance what we have seen in the last 1.5 to 2 years. And I think it will be now a stock-specific approach which one should take when it comes to the real estate space as well. Two stocks which I would like to highlight over here from the reality spaces. One is DLF. And I think that is ready. The stock is ready to hit its all-time high mark as well. I think DLF is something which is looking very bullish even from the current levels. And second, a stock which I would like to highlight over here is Prestige. I think after a decent up move, we have also seen a decent correction in the stock. And I think the stock on a fundamental perspective is also available at a very reasonable value. Plus on the technical front also, I can see a decent upside from the current levels as well. So Prestige and DLF, these are the two stocks which I'm bullish on from the real estate space. The entire space might go into a consolidation space, but within that space, you will have outperformer, and DLF and Prestige are my top two picks.
Well, certainly doing well, and the real estate index per se has done well, but a clutch of those stocks have come off as well, so that's to be kept in mind. What's done well though is the gas companies and Gail and the likes, GSPL, etc., are all up in trade today. Now, one of the reasons could be, you could argue that one of the reasons could be that spot cargoes for LNG are trading, or rather the prices are trading close to 3-year lows. Does that materially benefit some of these companies? And that's the question that we pose to Harshvardhan Dole. He's Vice President at IIFL Securities and tracks this whole space very closely amongst other things. Harshvardhan, thank you so much for taking the time out and speaking to us. Good afternoon, Niraj here. What have you made of the drop in pricing for LNG, and whether this is materially beneficial for some of the companies that we're talking about?
Hi Niraj, thanks for having me on the show. So yes, the LNG prices are at couple of year lows, and looks like the outlook will remain fairly benign for the next foreseeable period in time. Now, India should be a net beneficiary of this because we have a huge latent demand, and more so because now the government is trying to persuade a lot of users to move to this clean fuel. And to that extent, whosoever is engaged in essentially transportation or trading of LNG will be actually in a sweet spot. Having said that, I think companies like GSPL, who actually earn a utility kind of model, may not be directly gaining out of it because at the end of the day, they earn a regulated rate of return. However, companies like Gail, who actually consume natural gas either for their own or for trading purpose and essentially market and earn margin thereof, may stand to gain disproportionately. So between these two companies, I think somebody who can benefit a lot more is certainly Gail.
Okay. I hear you use the term disproportionately, and I'm guessing you don't use it loosely. So could you explain, Harsh, how do you think of these kind of gains for a company like Gail, considering the businesses that it is present in, and what does this immediate price fall might mean for them?
So Gail actually gains through weak LNG on account of two things. One is they have an active trading LNG business, whereby they source LNG from various sources internationally and sell in the domestic market. Now, at a time when these LNG prices tend to be weaker, their ability to source it from diverse sources at a very, very competitive rate kind of, goes up. And since India is sort of, energy deficient country, they're able to mark it up fairly well to gain in terms of, the trading numbers. So what Gail management had guided for the whole year for FY24, they've actually managed to deliver in terms of EBITDA in 9 months alone. And to that extent, there has been a marked uptake essentially in the overall EBITDA for Gail. If the outlook on LNG prices sustains, I think there will be further upgrades to their LNG trading business, which is at least 30% of the total profits. So that is one business where Gail gains. Second is they also use LNG for their petrochemical business. Here, the gains might actually be much lesser because a lot depends on what the petrochemical prices might be. And if there is a recovery at a time when raw material prices are weak, then there is one more leg for Gail to see an upgrade in terms of overall earnings. So in my opinion, while some upgrades have happened, if the LNG weakness continues, there is further upgrade likely in FY25 as well as 26.
And are you, based on the assumptions that you might be making, are you upgrading or have you recently upgraded Gail, part one? And part two, while GSPL may not be a major beneficiary, are valuations exciting enough for you to maybe give a constructive call there too?
So I'll take the second one first. Well, GSPL is certainly a good franchise. But again, the growth out there has been pretty muted on its own. Whatever earnings growth that they've reported has largely been on account of the 57% stake that they own in Gujarat Gas, for which consolidated earnings look far, far better. On its own, I think the earnings will look much better if they start spending more on the network and get permissions from the regulator to lay more network on the ground. I think that's the key event for which, the stock is kind of, trading cheap. I will wait for the event to play out and then take a decisive constructive call. With regards to Gail, well, Gail has always been one of our, preferred trading ideas in the sector because A, it was cheaper, and B, the weak LNG actually benefits Gail a lot more than anybody else in the sector. So we have always liked Gail, and we think that, it is a good trading idea in the short to medium term.
Harsh, this is really good. Thank you for patiently explaining to us what this could mean for a very specific subset. Look forward to talk to you on the broader space pretty soon as well. Well, that's the view from IIFL Securities and Gail, the principal beneficiary. And you heard the rationale there as well. Very quickly, Kunal, Gail, at the highest point of the day or thereabouts, would you trade this one?
See, I think if we look at the long-term chart for Gail, the long-term chart looks very good. Gail has been trading in an uptrend with high low formations. With the recent market correction, what we got in the mid-cap and the small-cap space, you could see that Gail has not corrected even much. So I think there's a good upside even from the current levels. Specifically in today's trading session, there has been a breakout with volumes. The past 1 week high has been surpassed with volumes, plus the 20-day moving average has been taken out. So I think a good time to enter into the stock from the current levels. 190, 195 could be an immediate target. And for a positional basis, it can also head towards 210.
So the word coming in on Gail. Another space that's doing pretty well in the markets today is the diagnostic stocks. Stocks like Dr. Lal's is up and about and trade with a gain of over 6%. We believe, I guess the day does belong to brokerages and their calls because everything moving in the markets is largely being led by brokerage calls. Kotak Institutional Equities now has issued a positive call on Dr. Lal Path Labs and Metropolis Healthcare. Varsha is joining us to tell us more. Varsha, why is Kotak getting excited about this space?
So, right, Samina. So, as you rightly said, so shares of Dr. Lal PathLab and Metropolis is up on the back of Kotak's report on healthcare services, wherein they have double upgraded Dr. Lal PathLab from sell to add, and they've raised Metropolis price target as well, maintaining a reduced rating. Now, as per Kotak, a pricing exercise, latest trends across 7 cities suggest further improvement in pricing trends. However, Kotak sees limited possibility of volume growth as large incumbents' price remain 2x that of cheapest alternative. Now, but this may not hinder volume growth for Dr. Lal and Metropolis as per Kotak. Now, this is due to an increasingly benign competitive landscape. Now, speaking about the individual stocks, the increase in price target for Dr. Lal to rupees 2,360 is after a prolonged period of stock underperformance. Now, shares of Dr. Lal has seen a correction of close to 15% so far in 2024. Now, Kotak attributed that the correction was led by exit of the company's CEO. However, brokerage believes that Dr. Lal has an able leadership team in place with Om Manchanda as MD, and the appointment of Shankha Banerjee as CEO will provide continuity. Now, in comparison to 1 year forward price to earning premium of 20% plus, Dr. Lal is now trading at a discount to Metropolis Healthcare. Now, while the brokerage has increased Dr. Lal price target, it has also raised a Metropolis Healthcare target to rupees 1,600, but has maintained its reduced rating on the stock, citing fair valuations. Now, the raise in target price for both the diagnostic players is led by increased growth estimates beyond 2026, and as they build in lower competitive intensity. So, this is the reason we are seeing upstick in these diagnostic stocks.
Right, Varsha, thanks for that. That's what brokerages believe the play in diagnostic companies is. Kunal, very quickly before we slip into a break, is there any of these stocks that you like? Dr. Lal Path, Metropolis, they're all up and about.
I think the entire lab space had witnessed a sharp correction from the higher levels, but whatever bounces what we are getting from the lower levels are not getting sustained. Again, we have got a bounce in today's trading session, but how sustainable this bounce is a question for me. So I think if I talk about Metropolis in particular, the stock has taken a support at a rising trend line, but it is very important for the stock to sustain above the mark of 1600. So earlier also the stock had taken a support at those levels, but again it is not able to maintain it. So if for 1600 we close today above it and we are able to sustain above this mark of 1600 for a couple of days, then we might see some attraction coming towards levels of 1700, 1725. So a good bet to take at the current levels on the long side because of the risk reward ratio. But this is a space which has been very vulnerable, and we don't see any consistency coming in the near term. So if it stays above 1600, one can continue to be long, looking for targets of 1725 on the upside.
Right. Kunal, Shah, stay with us. We'll take a break. It's getting to 3 o'clock. We're gearing up for the last half an hour of trade. It's not been a bad session. We'll take you through a lot, all that and a lot more on the other side. Stay with us. Welcome back. You're watching India Market Close. We've got 30 minutes to go. It's looking like an okay day of trade. The broader market's not doing quite a bit, actually. The stock-specific action is what's driving trade. But remember, it's a holiday truncated week, and it's also the monthly FM expiry. Agam is standing by with more on the futures and options picture. Agam, what's it looking like? Not too bad. I think today's market has given traders a lot of opportunities to make money.
That's true, Samina. Specifically, if you are an options seller, you are certainly making a lot of money today because it's been a smooth ride, a smooth decade through the course of the day without any large or sharp movements on an intraday basis, which means that, it's been a fairly quiet day as well. What stands out for the Nifty, though, a continuation of what we've seen over the past 3 to 4 sessions is further unwinding in open interest. This time, once again, about another 10% shed in OI as far as March futures go. I reckon that this is largely on account of the rollover shifting through towards the month of April. Though that said, we had about a 0.5% cut for the Nifty, still hanging on around the mark of 22,000. The Bank Nifty, the futures, again, of course, this number will, we're looking at about 2% increase in OI, but I reckon that at the end of the day, we will see a decline in the March futures as well, even as we start seeing positions being taken on in April and rollovers taking over as well. But of course, the spot has come up by around 0.6%. That brings me to the options market. As we move into the final 2 expiries of this month, and do remember that from this month onwards, even on the monthly expiries, the Bank Nifty and the Nifty will have separate own expiries, which means that tomorrow we are moving into Bank Nifty expiry. But for the Nifty, keeping an eye on still around the 22,000 mark. We are looking at a wide range for now, 21,700 on the lower end, and on the higher end, 22,500. Even in terms of change in open interest, or your overall distribution, we continue to see 22,000 as the one with the max OI at the moment. Of course, on the higher end, the 22,500 call also will give you a little bit of a resistance of sorts. But as far as your Fin Nifty is concerned, now, we are around 20,600. So a lot of these markers are completely out of the picture. Let's move on and talk about stocks then. And, we do have a lot of stocks in focus, where in fact we have longs in Manappuram Finance, HDFC Life and Metropolis. Info Edge and Godrej Consumers looking at some amount of shorts, and in terms of stocks which are seeing unwinding, that's where the numbers will look larger because of naturally rollovers. We do see short covering in Lotus Labs and Muthoot Finance. It's a wait and watch as to what kind of traction the April series brings for a lot of these stocks. And I reckon that, from today and tomorrow onwards, a lot of the focus will shift towards April as well.
Okay, thanks a lot for that, Agam. So that's some stocks to keep an eye out, and we'll keep an eye out for that, but have to mark the flashes on your screen as well. Zee Entertainment, the board has constituted a few things. Amongst other things, a special panel to review the management's performance. Also forms a 3M program, which is a monthly management mentorship program, targeted margins proposed by the MD and CEO, and so on and so forth. Music business, a separate vertical. So they are trying to do multiple things, but the stock price doesn't seem to be really benefiting from anything whatsoever. The deal called off was the big bummer for them as well.
It would be interesting, Niraj, to see what the stock was trading at pre any whiff of the deal, right? Whether we've gone back and returned to those levels. Because post the deal, the stock rallied up. But from what it looks like you said, no matter what is said and done, there's just nothing that helps the stock at this stage. But whether or not it's gone back to those numbers would be interesting to note.
I think below. So it started rallying from, if I'm not wrong, 160 all the way to
116
to
or 160.
160, and I think now. So if you pull up the last 12-month chart, viewers, we'll tell our team to do that, and then we'll get in Vinit Bulinshkar's views on this. But if you pull up the 12-month chart, look at the volatility there. From 160 went up all the way to 280 or 290, and from there it's just crashed. It's currently trading at 140. Vinit Bulinshkar, any thoughts on Zee, and can something rescue this ship?
I don't think that there is any positive encouragement in this stock as of now. So you have corporate governance issues, you're facing some very stellar competition where you need a lot of funds. And your pricing power is going to be determined by what the competition is charging you. And if you want to do content which is superlative content, you have to invest. So I think they're going to be a little bit on the defensive side. And I expect this stock to move gradually down toward 100, 110 levels.
Well, clearly under pressure, though, Zee Entertainment 139 and counting and not doing that great. The fundamental, the positives of today, and we've spoken about the charts at length on these stocks, but fundamentally, Vineet Bolinchkar, in a falling market for Interglobe Aviation to do what it has done is nothing sort of exceptional. We've heard the brokerage calls already. Would you be a buyer in Indigo, or would you look at other aviation opportunities? It could be a SpiceJet, it could be a GMR, airports, infra, it could be something else.
So we like Interglobe Aviation. Obviously, they have the business bandwidth, they have the market shares, and they are well tuned to take part in the overseas operations also, which will drive their margins further. So we believe that this company is well placed to, milk this kind of situation where you have limited competition. SpiceJet is getting their act together. They struck a deal recently. I was not too sure about the numbers. I couldn't count but I believe that if that company can get its act together, then this stock can do some spectacular things. So this would be a very high risk, high reward kind of trade for me as far as SpiceJet is concerned. But if you want to go with safety, surety, I believe that Interglobe Aviation is the company to be in. As far as airport plays are concerned, I think there is one small SME play called Avalon Technologies, where you can have a look. This is a SME counter, and they specialize in playing your airstrips. So they do not have a lot of competition out there. So that is one company that we like. Apart from this, GMR airports, and we also like Adani Enterprises because of the incumbent play of the airports listing happening within a year's time.
The better way to play the airport game is potentially, like Vineet said, through Adani Enterprise, which is an incubator for Adani airports. Vineet, Avenue Supermart, it's taken its time, but today there have been a whole bunch of brokerages that are fairly constructive on Avenue Supermart, and you're being able to see that excitement in the counter. From a medium-term sort of time horizon, Avenue Supermart is a good value buy, you think?
See, I believe that their econometric modeling was very, very strong. Unit economics were very strong. They were only suffering on the fashion business, which was seeing lower margins. But with retail and rural spends picking up, good, Rabi harvest 8% higher, I think this is going to play out, and that is going to augment the margins. And this is what is causing the turnaround in the stock. I think a 20% upside from current levels over a year's time is what we'll be looking at.
Mm-hmm. Okay, watch out for Avenue Supermarts as well. We've given you both the technical and the fundamental call. Just trying to look at stocks which have had some price movement on the back of volumes jumping up as well in the session. There's a small stock called Deep Industries which has gained yet again and is up on very high volumes, so watch out for that. We've spoken about Apar Industries, and look at the up move in Apar Industries today, both on price and volumes. It's now trading at 9.5%, almost 10% higher for Apar. Has it hit just about that circuit levels, but a very, very strong up move that has come into Apar Industries, so that's the other one to focus on. And then there are others like PVP Ventures, or for that matter Max Health, which have had a good move, and at time Technoplast, which is up about 11% as well. But Apar clearly right up there. RR Cable on that brokerage call, Samina was saying about how today has been a brokerage call day, and RR Cable is no different. Very strong move there on the back of this as well. Just a quick word on any of these names, Kunal, that you may have spotted, particularly Apar Industries or let's say a time Technoplast.
See, I think if we look at Time Techno Plus, that is one stock which looks very interesting on technicals. The reason being is if we look at a long-term chart, that is the monthly chart for it, it is a classic double top breakout what we have got from the stock. So I think there's good upside available even from the current levels on a positional basis. Already the stock has rallied a lot, so if you are holding it from the lower levels, continue to hold it. For fresh entry, the resistance on the higher end, which was placed at around 240. If you get at those levels, that would be a good opportunity to enter long. So 240 to 235, keep it as a fresh entry range. One can look for positional targets of at least 300, 320 in the near term, which is like almost 20% on a positional basis. For a short-term perspective, one can immediately look for at least 265 to 272 on the upside.
Right. Well, that's the call coming in on Time Techno. Well, let's move on from there. And Popular Vehicles is the second automobile retailer which is to get listed on the exchanges after Landmark Cars. But of the two, which one should you be betting on? Puneet has done some research on this and is here to present us with the analysis. Puneet, what is a better bet if you want to play the space? Landmark, or is Landmark topping the list, or do you have something else?
Yeah, thanks, Samina, for that. And as you rightly said, the second listed space in the as an auto retailer after Landmark. Now, do know that Landmark listed on the bourses in December 2022 and has been up 55% since those levels. Now, if we just look at what kind of brands do these automakers offer. Now, for Landmark specifically, it works in the premium to luxury space, where it works with brands like Mercedes, Jeep, Volkswagen. While for Popular Vehicles, they operate in the mass to premium space, which they cover brands like Maruti, Honda, and also have a couple of showrooms for JLR, but that is at a very lower base. Now, moving on, they also work with someone like Tata Motors and Daimler in the commercial vehicle space. And going forward, we'll see the other aspects they work in. Now, out of the two, which one should you work for? Now, specifically, the luxury penetration in India for passenger vehicles is very low, at just 1% of all passenger vehicles sold in the country. So for the last calendar year of 2023, there was roughly just 47,000 vehicles sold out of the 40 lakh vehicles sold in the four-wheeler space. Now, moving forward, when we look at the kind of revenue split both these segments have, for new car sales, which is primarily in the business they operate in, for Landmark, it's up 77% of all revenues come from new car sales, while for Popular, it's at 68%. Now, do note that the new car sales is a lower margin segment which is an industry-wide phenomena. And the interesting bit is here, which is highlighted in blue, which is the after-sales market. Now, that's roughly 20% for Landmark, and this is a very high EBITDA margin business of roughly 18 to 20%. And for Popular as well, we see that segment of after-sales is little lower compared to Landmark. And as you can see, while for new is just 2.4% EBITDA margins, this was affected in Q1 due to lower launches. We see that after-sales is high for Landmark at 18% EBITDA margins. Moving forward, the same thing for Popular. We see that new car sales has lower EBITDA margins of roughly 2.7%, while after sales, just similar to Landmark, is at 19%. So the after sales segment is key here to watch. And the main thing for your Landmark has a higher after sales segment. They also have a pre-owned segment, which both these car makers operate in, but we don't have any kind of EBITDA margin data for that. But it is supposedly higher than the new car vehicles. Moving on, we see that the percentage of sales for Landmark as per the auto OEMs. Now, what this means is that for every 100 cars the Mercedes sells in India, 16 are almost sold by Landmark. We see that the other, as per Honda, Jeep, Volkswagen, all have higher shares. Now, Jeep is another notable, where they sell 24 cars out of every 100 are sold by Landmark in India. While we see, comparing the outlets, we see that Mercedes has roughly Landmark operates roughly 21 outlets for Mercedes in India. And we can see that the share is increasing. These are the top 5 for Landmark. We'll see the top 5 for Popular next. While we see this is a marked shift. Now, Maruti is one of the key segments that Popular operates. Now, they have roughly 64% of sales are of Maruti Suzuki. So that's one big margin, and that operates in the mass to premium segment, so lower average sales. For Honda and going forward, Tata Motors CV is one of the key which is up at 13 outlets, while Bharat Benz, which is the commercial vehicle of Daimler, is roughly at 8. Moving on now, roughly there are 117 outlets that Landmark has versus 130 of Popular. So neck and neck, both are quite similar. Now this is the most important slide. Now if you can see the revenue, Landmark is roughly just 50% lesser than something of what Popular does. But look at the gross margins, look at the EBITDA margins. Gross margins, they are at 20% for Landmark versus just 15% for Popular. So even though on a percentage basis, when you see the number as a whole, it just does look lesser for Landmark, but when you take it as a percentage, so 304 crores on 1400, roughly 20%, that's the higher gross margin, and that translates to the EBITDA margins as well for Landmark, which is one of the key segments. Finally, moving on, as you can see, 20% for Landmark, 15% for Popular, and that's where we see the valuation difference. And to end, at the end, as per an ICICI Securities report, Landmark currently trades at roughly 39 times its current price to earnings, while Popular, which we have just taken numbers from, is DRHP, is at 22 times. Interestingly enough, 2 years forward, FY26, Landmark trades at 22 times. So that's where the valuation differential is. The market is giving a higher premium for Landmark cars, but that's the bottom line for which we'll see, and as to which one will take the baton forward. Back to you.
Indeed, Puneet, it's interesting given that only 1% of luxury cars sold are in the luxury segment. But Kunal, you want to do this on the charts? I know not too much data given that there are some of these are very recent listings. But Landmark versus Popular, what looks better on the charts? And of course, then I'll come to Vineet for a fundamental view too.
Yeah, I think if we look at Landmark cars on technical charts, there has been clear-cut a top which was made at 900 mark. And post that top, we have seen a decent correction towards 700 levels. Now the support for the stock stands at 680 zone. So we are currently trading at 690. So we are at a very critical support zone of 680, 670 zone. So at the current levels, I'll be in fact a buyer in this stock for a contra bet where one can initiate long positions as well. 690, 680 has been typically a zone from where earlier also we have seen strong buying with volumes as well. So I think a good risk to reward ratio at the current levels as well. So one can buy at the current levels, keep a stop loss of 670 on the downside on a closing basis because at the support level, closing basis stop losses are very important. So 670 as a stop loss, and one can again look for a pullback at least towards 740, 760 zone on the upside.
Vineet, do you have a preference? Do you even like this space, Landmark versus Popular vehicles? If you had to buy one stock, which one would it be?
Well, definitely Landmark cars, because we expect a faster growth of, foreign branded vehicles, number one. So we expect this segment to sustain growth. Second is we expect margins to move higher because, only 20% of the business comes from servicing. And here we expect steady growth in margins. And, the used car resale business is also quite picking up quite nicely. So keeping all these things in mind, I think that Landmark cars provides you with a better bang for the buck compared to Popular vehicles.
Right. Vineet, you want to recommend stocks to our viewers? Anything that you like specifically? I know you can't make daily calls that are fundamental in nature, but tactically, any of these counters that have caught your attention that you're adding to your portfolio at this stage?
So Adani Enterprises is one. I keep talking about it. So apart from that, SBI looks very strong. We like SBI. We think that in FY25, the stock could probably be one of the best banking plays. Apart from this, we have spoken about Indigo, Interglobe Aviation. We like Philips Carbon Black. We believe that the company is doing a very strong turnaround in terms of becoming a specialty chemical play. And recent forays into batteries is also very encouraging. So we expect these few stocks to do very well going out into the new fiscal.
Right. Talking about Adani and the group itself, sustainability is also the buzzword as India guns for growth in the ever-changing geopolitical scenario. And Gautam Adani has announced that Adani Green is aiming to produce 45 gigawatts of renewable energy by 2030. He was speaking at the inauguration of the Energy Revolution Gallery at the Science Museum in the UK.
We are the bridge between generations. It is our duty to take care of our planet, not only for these generations and the next, but also for the generations to come.
No, the statement is not from the recently released and much talked about Netflix sci-fi drama Three Body Problem, but Gautam Adani, the chairperson of the Adani Group, laying out the need for sustainability while inaugurating a new science museum gallery in the United Kingdom. The Indian billionaire spelt out the near-term plans of the world's leading solar power developer and India's largest renewable energy company, Adani Green.
We are also aiming to reach 45 gigawatt of renewable energy by 2030. This will be like providing clean energy to almost every house in England.
Adani also told the gathering that Khavda in Gujarat will soon see the world's largest renewable energy park come up. It will have a generation capacity of 30 gigawatts of energy and is spread over an area of 538 square kilometers, an area 5 times bigger than Paris. Bureau Report, NDTV Profit.
Well, that was Gautam Adani unveiling his plans for green energy. A disclaimer, NDTV, the channel you're watching, is a subsidiary of AMG Media Networks, which is an Adani Group company. Well, Kunal, we've got another 7-8 minutes to go before we wrap up trade. Any buy today, sell tomorrow, sell today, buy tomorrow trades for our viewers?
I think what we discussed on the show as well, I think the reality as a space has specific counters which will continue to do well. From that pick, my will be DLF, even at the current levels. So 874 is currently where DLF is trading. So one can initiate longs at the current levels. Keep a stop loss of 850 on the downside. Look for first target of 910 and second target of 930 on the upside.
That's a few of the buy trades coming in from Kunal on the charts. We've highlighted most of those counters that are doing well, but another space, Vineet, I don't know whether you've been tracking OMCs recently. There's been so much back and forth from being very expensive to getting very beaten down to crude now at 87, the dollar looking a lot stronger. The uncertainties have only sort of multiplied for OMCs, even though they probably are the most cheap, the cheapest PSUs currently available. Any of those OMC names you're constructive on, Vineet? Vineet, that's for you. OMCs, is that a space that you're tracking or you like?
We are very positive on BPCL as well as HPCL. BPCL is our preferred play, and we believe that if you do discounting or you use your traditional ratios, we believe that stock price of 1,000 is what the stock price should warrant over the next couple of years. And so we are quite positive on this. And if you look at it, even from a perspective of how the business model of the companies are changing, they're getting more into green energy, their spends are getting more leaner. They're doing some of the largest capex, keeping in mind India's requirements. So, and they're good dividend plays. So, what PFC and REC were last year as a play, I think BPCL and HPCL are my favorite plays on the PSU basket.
In fact, we did get a chance to catch up with the Petroleum Minister Hardeep Singh Puri. And let's listen into what he had to say about the performance of OMCs in that conversation.
Change is staring you in the face. Suddenly the public sector, I'm talking about perception now. I can come to individual companies. I'd be happy to share one or two examples. Public perception used to be that public sector companies are like the bureaucratic setup of the rest of the government. People come to office at 9 o'clock, run away at 5 o'clock, they are risk averse, they don't go out and grab the challenges which are available, and by and large, and there are some other allegations that the oil public sector companies or the OMCs are also excessively amenable to some of the big private sector giants, that they are able to control them. I think the good news is that public sector in general is doing very well. I also happen to be Minister for Housing and Urban Affairs. HUDCO has done very well. HUDCO has got what, Maharatna status now. The OMCs, somebody said, but the market is rising. Yeah, market is rising, but the market rose 43% and the OMC valuations rose in multiples thereof, some 120%, 160%. Why? Because they've done a good job. And in a time of crisis, in a time where there was challenge, they proved their mettle, and the marketplace, I don't use words like the magic of the market, but the market has a lot of very intelligent people who can make assessments on what is happening, and that's how valuations go up.
Well, that's Hardeep Singh Puri talking about the valuations of some of those OMC stocks. Well, Vineet, Kunal, thank you very much for joining us today on the show, taking us to the last hour of trade. It's not been a bad trading session. In fact, a very steady one. If you're an option seller, you'd have been making quite a bit of money. And also, if you were playing stock-specific action, you would have earned quite a bit of a premium, given that we started off steady and remained steady, but the day was dominated by stock-specific trade. We're going on with a small cut, still about 22,000 is where we close, 81 points lower on the Nifty 50. That's pretty much where the index started off today's trade, and going on with that at the end of the day as well. The broader markets did slightly better than the benchmark in today's day of trades. The mid-cap and the small-cap index witnessed some outperformance. In fact, a lot of outperformance. The mid-cap index was up about 1% when the broader markets actually went home with a cut of 0.4%. Small-cap index also doing better than the benchmark, 0.5% lower in today's day of trade. Well, let's take a look at what the big movers and shakers were. Like we said, the action was concentrated in the broader market pack. The breadth of the market for the Nifty 50 was clearly biased towards the losers, but nevertheless, worth a mention of a few gainers that we had in today's day of trade. Bajaj Twins did okay. Hindalco, Britannia, Adani Group companies were up 2%. NTPC, L&T, BPCL, despite high crude prices, has gone home with a marginal gain. Coal India, Axis Bank went home well as well. On the sell side, Power Grid was down 2%, Bharti, Aisha, HDFC, so banks, IT, despite a stronger dollar, some of your metal counters, auto companies have all seen cuts in today's trading day. Well, if I can just quickly get some of the gainers and losers across the broader markets, it'll give us a more conclusive picture of where trade really was. Stocks like Uno Minda, Interglobe Aviation, Finolex, that was one of your top gainers in trade today. No apparent reason, no brokerage calls, but the stock went home with a gain of 10%. Today's day and today's drive in terms of trading activity was led largely by brokerages and their buy calls. So you had a couple of counters that did well. Interglobe had a buy call by UBS with a 25% upside. Kotak Institutional Equities is optimistic on diagnostic companies, on back of which the likes of Dr. Lal Path actually went home higher. On the sell side, you had Tata Investment that for the, 7th, 8th trading day has gone on with a 5% lower circuit. Timken did quite badly as well. GM and IFL also had a draft on back of a special audit that's going to be conducted by the regulator. You had Garvade Technical, Kajaria Ceramics also going home with cuts. But all in all, not a bad day of trade. While the benchmark went home flat and the breadth of the market across the Nifty 50 was weak, broader markets saw enough and more action. In fact, that sector or that vertical of the market actually went home with a gain of 1%. With that, we're completely out of time on India Market Close. Thank you for watching.